What's up guys, and welcome to WSM Research. If you've seen our last video, we announced the result of our vote and Huya and Douyu received the most interest in the comment section from you guys, so we'll be making weekly update videos on these stocks. I am not a financial advisor and this video is for educational purposes only. With that being said, let's get into the video. Both Huya and Douyu are the dominant players in the Chinese video game live stream market, and each one holds roughly 40% market share. Here is Huya's website. As you can see, it's a live streaming website similar to Twitch TV. Influencers stream video games such as League of Legends, and viewers send donations, of which Huya takes a cut. Douyu has a similar live streaming platform, but focuses more on eye candy. The reason these stocks are interesting is because the video game and live streaming market in China are growing rapidly, fueled by secular tailwinds around internet adoption and the rise of esports. According to Newzoo, there were around 450 million global esports viewers in 2019, of which 57% were from the Asia-Pacific region. This number is expected to continue its strong growth and reach almost 645 million in 2022. China has been the leader in adoption of esports, with more than 1 in 5 Chinese residents having watched esports. In the past, the Chinese government tried to crack down on esports and live streaming as they feared kids wasted too much time glued to screens. Furthermore, Chinese regulators are very conservative with strict anti-pornography laws. They feared many live streamers violated these regulations, at least in spirit. But as esports and video games continually grew in popularity, the government realized that they were fighting a losing battle. In 2018, the Chinese League of Legends team beat the South Korean team to win the Asia League Games. This was a point of national pride as the two countries have long been geopolitical rivals, and the South Korean League team was considered to be the best in the world at the time. The Chinese government gradually loosened its scrutiny over the video game industry, allowing China to become the #1 market for video games since 2016. These tailwinds are likely to continue into the future, with Huya and Douyu being the biggest beneficiaries. Now that we understand the industry, it's time to drill down into each company, starting off with Huya. First, it's important to understand how Huya makes money. They make their revenue by the sale of virtual currencies which consumers use to buy virtual products. These products are mainly virtual gifts the consumers give to live streamers or monthly subscriptions that give them special perks, such as priority speaking rights and special symbols in the comments section. Looking at this example, on the right-hand side, you can see that there are 3,000 COP members who pay a monthly subscription to this live streamer, and people donate virtual gold as well that the live streamer can exchange for real money. Huya signs a revenue sharing agreement with the live streamers, and for big-time influencers, they go through talent management agencies. Huya has been benefiting from the growth of video game live streaming, but streamers don't just play video games. There are many female live streamers who use heavy makeup and filters to maximize their looks and interact with the fans, who are mostly middle-aged men. There are similar live streamers on Twitch. This type of live streaming mainly targets single males who suffer from chronic loneliness and crave human interaction, even if it is online. With the rise of social media, people are becoming more lonely than ever as they are stuck at home glued to their phone all day. In 2018, the US health insurance company Cigna conducted a survey showing increasing loneliness among the younger generations, with roughly 15% increases in loneliness from the boomer generation to Gen Z. As of January 2020, 61% of US adults reported feeling lonely some or all of the time. This number was even higher for workers aged 18 to 22 at 73%, an increase of 5% from a year earlier. This has obviously only gotten worse during the pandemic. While we don't have any specific data for loneliness in China, it's almost certainly just as big of a problem there. While this is obviously not a great thing for humanity, it is a huge tailwind for Huya's streaming business. Looking at their annual income statement, their revenue has been growing rapidly over the past few years, more than doubling in 2018, increasing another 80% in 2019. And despite investing heavily in new technology, they turned a small profit of 468 million RMB in 2019. This growth has largely been driven by steadily increasing monthly active users, or MAUs. MAUs have almost doubled from around 90 million in 2018 to more than 170 million in the most recent quarter. This represents a compounded annual growth rate, or CAGR, of 28%. While the percentage growth rate has decreased, this is mostly due to the law of large numbers, as the percentage growth will be lower when you are increasing off a larger base. User growth as well as increased monetization has led to even faster revenue growth, which has increased at a CAGR of 57% over the same period. Overall, Huya is a high-quality company with a strong record of user and revenue growth. At the current run rate, they will make about 1.6 billion USD in 2020. They currently have a market cap of $6.2 billion and a net cash position of about $500 million, giving them an enterprise value of $5.7 billion, or a price-to-sales multiple of 3.6 times for 2020. This is an insanely cheap valuation for a company that's growing revenues at 30% and benefiting from long-term tailwinds around video games and live streaming. To put this valuation into perspective, Snapchat has a trailing 12-month price-to-sales of around 38 times, and Pinterest has a price-to-sales of 30 times. With that being said, we are not financial advisors, and make sure to do your own due diligence before making any investment decision. Let us know in the comment section below what you think about Huya. In the next video, we're going to discuss the financials of rival Chinese live streaming company Douyu and discuss the proposed merger between the two firms, which has been called into question by Chinese antitrust regulators. If you like this content, make sure to like and subscribe and share this video. Thank you all for watching, and we'll see you in the next one. WSM Research, signing out.